Okay, it's noon here, Mountain Time, so I think we can get going. So, hi everyone, I'm Gregory Batchelor. I am the VP of Marketing here at AB Tasty, and I want to welcome everyone to this second session today, doubling down across digital channels post-COVID. So I'm very pleased to have a great panel today, and we have 3 panelists. So I'll introduce you guys right now. Bastien Berton, who's the Director of Product Management at Yieldstreet. Hi, Bastien, how are you?
Hi, I'm good. Thanks for having us.
Cool. And where are you based today?
Based in New York today. You know, it's a year where New York has a different flavor, but still good to be here.
Awesome. We have also Matthew Pantaleoni. He's the Director of Experience Orchestration and Personalization at Accenture. Hey, Matt, how are you?
Hey, very good. Thanks for having me. I'm in sunny Denver and looking forward to the discussion today.
And by the way, I'm Matt's neighbor. I'm in Boulder, so. Hey, James, how are you?
Hi, nice to be here. Thanks for having me. All good, and I'm coming to you from a rather dark and cold London at the moment.
Wow. London is a great city too, though. So thanks, guys, for joining. So basically today, we have 3 great panelists. I'm going to ask them to introduce their company and where their company is going and their vision in a few seconds. But I think it's important to note that obviously COVID has changed a lot of things in the past few months, and in terms of like digital investments and digital. There's been a lot of changes in the digital landscape, and what we wanted to do today is really go through the experience of Bastien and James, which are companies that are doing great in the environment, Yieldstreet and Tradingview, but also have the view of Accenture, Matt, who works with a lot of large customers. So I think we have a great panel to talk about what have been the changes and what to look forward to in the digital scope. Sorry. So let's jump in. Maybe we'll start with you, Bastien, just to introduce Yieldstreet and talk a little bit about the company for 30 seconds and the vision of your business.
Yeah, perfect. So Yieldstreet is a leading alternative investment platform that is transforming the investing landscape by giving individual investors, like us, access to alternative investment that usually were reserved to institution and 1%. And more than 1.1 billion has been invested to date on the platform across a range of alternative asset class, whether it's real estate, art, legal, commercial, and consumer. On my side, I've joined with a growth and product background, and so trying to help, match a company where there's a side coming from the investment side and the investment world and the tech and marketing world, trying to work together to bring a good experience to the users.
Cool. Awesome. Thanks. And James, do you want to go through Tradingview and your story and where you guys are going?
Sure. So Tradingview is a world-leading charting platform and social network for retail traders, helping them invest smarter. We provide all the tools, all the data, whether you're into advanced day trading and technical analysis, or you want to look at the fundamentals. Tradingview is where it all comes together, and you speak with users as well in a social network format. We are on a quest to get to the very top of the financial web. Nowadays, most people might, if they're looking at stock information, might go to Yahoo Finance. In 3 to 4 years, it should be us, and that's where we're going.
That's awesome. Thanks for the great summary. And then I don't think we, can't present Accenture, but Matt, do you want to give us a quick overview of, Accenture, what you guys are focusing on the interactive side? Thank you.
Yeah, absolutely, Greg. I won't go into all of Accenture. We do many things around the world for many different companies. But within Accenture Interactive, which is where I've been sitting for the past 10 years, we help the world's companies, governments, down to local agencies. We help them create the best experiences in the world, and are frequently at the intersection of topics around data, around customer experience, and around silos, and breaking down those silos at the companies we work with.
Thank you so much for the intros, everyone. So I want to jump in with a first question that I think has been asked a lot on panels in the past few months. But how has your business been impacted by COVID? I think it's always good to understand the perspective of you guys, especially in the financial sector, I would say. And maybe for you, Matt, on the Accenture side, starting with what you've been seeing with some customers on the impact on COVID. Could you elaborate on that?
Yeah, absolutely. We've seen a number of different things with COVID, and then for all the events that have happened in the States affect a variety of different things with our clients, both for good and for bad or challenges, right? But with every challenge, there's a new opportunity. Just thinking about the mechanisms of things that we had to change internally. Myself and my teams were used to going to offices, right? And interacting there in person, or having coffee with clients. Those events had to be replaced with virtual happy hours and virtual events. Additionally, just the sheer need for collaboration tools and accelerating our own adoption of cloud-based collaboration, it's Zoom or Microsoft Teams. I believe we released some public stats over the past couple of months that says we're clocking billions of hours of virtual meeting minutes through Microsoft Teams. So anyways, a lot of shifts had to be put into place for simply just getting business done. How do you talk to clients safely? What are their perspectives, and then making sure that we're operating in those norms.
And on your side, James, what has been the impact on Tradingview and on COVID? Did you see more traffic? What were the changes on your side?
Well, with everybody at home and the markets plummeting, we were actually quite fortunate, because a lot of people decided that now was an opportunity to take hold of, to start trading. Traders who'd been dormant for a long time came back, new people came. So we saw a massive spike in our traffic, in our customer base. We shot up from basically in the start of March, we were a top 300 website, according to Alexa web rankings. We're now 130. So we've jump frogged very fast, very far. And so our challenge has been, a lot of these people are coming to Tradingview for the first time. And what can we roll out as quick as we can to really start catering to people who have less intent than we might normally expect? Our customer base is they're really into their trading and they know their stuff. Now we're getting a lot of people who don't know quite as much. So we need to start thinking what products we're going to offer them, how we're going to increase and aid their understanding of the space in general, and really focus on retaining these people as the world goes back to a new normal.
Congratulations on the growth. I looked at your website and SimilarWeb, and I could see the curve going up, the traffic. I think you're above 100 million.
That's the way to go.
Yeah, exactly. Good job there. And Bastien, on your side, what about Yield Street? What did COVID change for you guys?
So to give more details about Yield Street, we are a two-sided marketplace sitting in between, on one side, borrowers and loan originators, and on the other side, investors. I think that both sides of the equation, were impacted in different ways. There was a lot of uncertainty in the market in what was happening, that made that origination of new loans was really tough. At the same time, some people needed loans even more. Just going to an administration to get some paperwork registered, to get a lien on a property, or getting an inspector to check a warehouse, to assess its value, that was very disrupted. And so I would say from March to May, there was almost no origination volume across the market. On the other side, our investors, our members, had a lot of time at home to dive into their portfolio, but also they were seeing the market plummeting. So, there's stress and there's question, and then the market rallied again. So there's a bit of uncertainty on this side. Some people decide, hey, it's the right time to go into alternative investments and diversify. And some of them are just scaling back and waiting for things to stabilize. But I think that, with all these constraints and these changes on maybe the product mix, that we focused on, it also brought us the ability to connect more with our users, generate more content for them, but also show them how we could perform in difficult times. So also putting us on an equal footing with retail competitors.
This is very, very good. Thanks for giving us the overall picture. So James, coming back to you, you talked about better content and stickiness of the new users that are coming to your website. On the digital front, what type of opportunities showed up on your side in terms of all your digital digital channels? What changed on that front?
Well, we basically, our proposition is a freemium model. So we provide a lot of value up front. People can get and start playing with the charts very early on, straight away, seeing what's going, testing all the tools out. And it's quite a complicated product. It's almost like a sort of an Adobe Photoshop, but for trading, right? So there's quite a lot to learn. And we don't put up any gates really until people need to trade, as in once they've really got a hang on the basics, then they'll need a few extra features, and that's where our pricing model comes in. We're quite unusual in that we're a social network, but we also have a SaaS model attached. And what we saw during COVID is that most people were wanting to find out information very, very quickly about things such as, let's say, Bitcoin. Tesla, for instance, has had this massive rocket run. All the big tech people were wanting in on the action, and they wanted to see what was happening with regards to the price. So our SEO traffic went through the roof. We have around 17 million visitors every month. And so a lot of our focus of where our development is going is about these symbol pages, and how can we provide even more value? How can we show exactly what the user actually wants to see? And then how can we layer content on top for beginners and people who are not necessarily as advanced? And where we're looking at those sort of content is how can we do that in a way that relates to our product? So for instance, layering content onto charts to explain why Tesla has gone on such a rocket ride, why these crashes have occurred, and in doing so provide a means of consumption that is unique, but is also providing a lot of value. And we hope that by doing that, it reinforces this idea of getting more backlinks, getting more websites to recommend us, and therefore that continues this virtuous circle that we go up and up and up. So that's really our approach. It's very much in line with going for scale by providing value, and as much value as you can afford to up front without asking people to pay for it.
Okay. That's good. Bastien, on your side, any opportunities that arise on the digital front? for Yield Street?
Yeah, I think from a content point of view, as I mentioned, people were at home, people were curious, people had time and wanted to see what they could do with their portfolio. So we definitely published quite a bit of content. We had a founders blog with our view of the market. We started webinars and podcasts, to try really to engage and bring content to our users. Definitely, like James, we try to get some content for new users, people that have less experience yet, and you need to adapt, you need to kind of educate over time. But we're also ACC regulated, which is good. We have this kind of seal of approval, but it also means that there are a lot of things that we cannot do. We cannot give a pure opinion of, hey, our investment is better than Tesla, go there, it's great. We really need to kind of balance how we provide context and the information. But that's really kind of gave us the opportunity to engage more. And at the same time, we decided to lower our minimum investment on multiple products. And so expanding a bit to a population that didn't have access before.
Okay, that's great. So Matt, what about your customers, large enterprises, that customers of Accenture? What have you seen with them in terms of the opportunities that arise with COVID?
Yeah, I think there's three things really come to mind, and it echoes what James and Bastien said as well. There's been, and I work with a lot of high tech companies on the West Coast currently. There's been kind of a push to go, for lack of a better term, back to basics, right? Because of given the incoming influx of traffic and new users, some processes at the clients that I work at needed to be rethought and reconfigured to make sure that we've got the right types of segments and segmentation definition as those visitors arrive, that we can serve those folks with the right content. So back to basics around getting data aligned, because we know it's all in different places, especially in financial services and elsewhere, having the right segmentation schema, and then talking about, going back to personalization at scale. I think the second theme, very closely related, is orchestrating your content in a meaningful manner, so that we're sending either proactively or reactively the content that folks are interested in, whether it's a new user, a seasoned user, or a different type of customer segment. And the third is, again, we've seen influxes of engagement metrics. Traffic is going up, email open rates are going up, click-through rates and ads are going up in general. But then the drop-off is happening, at the point of conversion. So, the need of that real focused and specific personalized experience is critical in digital. And then in many of the industries I work in, having tie-ins with the call center to assist in closing the conversion, especially for high, average order value purchases, it has also been a critical component.
Great insights, and I can relate to some of these, especially on the back to basics or resetting your digital channels. I've been looking at some of these on the A/B Tasty side as well. Just a quick break. If the audience, you guys have any questions, don't hesitate to ask them in the Q&A tab. We'll take care of these at the end of the session, so please do so, and we'll take care of these with the team here. So let's jump into, I think, maybe the meat of the discussion here. It's always interesting to have your free views in terms of investments and what's working and not working on the digital front. Bastien, for example, can you give us an idea of where Yield Street is, pushing? Which buttons are you guys pushing on the digital front? What are you actioning? What are the things that you're investing in?
Yeah, so I think that Matt said something important. It's you need to reevaluate at a cadence what you are doing. And when everything is growing at fast pace, you keep doing new things. But every once in a while, it's nice to take a pause and recheck what you are doing and where there are some gaps. And so clearly, for us, we were in a good trajectory. We had time this year to kind of pause again and look at the segments and the type of interaction that we're offering. So focusing first on our investment product mix, there are some product that we are going to launch that we postpone, some that we moved forward, and so one of the big launch of the year, in fact, just before COVID, was our Prism Fund, which is our first product available to everybody. It has a $5,000 minimum, but you don't need to be accredited, meaning you don't need to have $1 million of assets or 200K of income to start investing in it. It's a big part of allowing people to start building wealth earlier in their life. From a user acquisition, point of view, I think we have two types of channel. Obviously, like everybody, the organic and the paid. The paid is scalable to a certain extent, becomes more expensive, but you mainly attract people without context. So obviously, organic, if people look for you, if they have heard about you, if they've been referred to you, this is quality type of users. So that's definitely something that we're investing in, as I mentioned, with webinars, podcasts, and other content. And maybe I would say in this kind of environment, it's also for these channels, trust is a very important aspect, and so investing in all the topics that will build trust with these users, both old users and new users, is also a kind of really important investment, to get people to trust us to invest their money.
Very clear. Thank you. What about you, James? Where are you guys investing to drive more traffic and convert more users using Tradingview?
Mm-hmm. Well, I would agree with Bastien. Trust is very important. We are doing a lot. As I mentioned, a lot of people are coming to the site for the first time. They're coming for a very specific reason, which is they want to find out the price of an asset, like the price of Bitcoin, let's say. And then what we're trying to do is show the excitement and, again, the trust that they can have in us as this social network, and also this trading platform where they can analyze their favorite assets and understand financial markets in a lot more detail. That requires a whole wealth of things that we've been focusing on since COVID, completely rewriting the tone of voice for the website, making it more what you would expect of a newish fintech brand. We're not an old stuffy Bloomberg, let's say. When we're not a legacy bank, we are new. We represent a new generation of people who are accessing finance. So yes, brand tone of voice, redesigns, looking at how we can bring the brand further to life and make it more memorable, and then really just pushing the idea of the brand further. And so, for instance, a lot of our work is also in PR and comms and getting digital publications to link back to us for SEO. That has a massive importance to us, and we place a priority on it because it means that those pages will ultimately rank higher. But they're not going to do that unless you have a reputable site, you have reputable and interesting and engaging data to show, which again comes from our users and how they're interacting with the platform. All of this adds together to really sum up as a concerted effort to get people to trust us, to get people to be excited by us. So while it's not like a hard line, we're focusing on paid acquisition which we don't do any of actually. It's all organic. That's why we're focusing on all of these channels and trying to get people excited, using and deriving value from the platform.
That's awesome. That's great. What about Matt at Accenture? Any big investment channels for some of your customers that are popped up in the past few months?
Yeah, from an Accenture standpoint, obviously won't go into details, but we invest a ton of money every year in education for our 500,000 plus people, as well as in acquisitions, and some of those have been made public. We have a lot of acquisitions in the artificial intelligence space, which is very important these days. Some of my clients, in talking with them, helping them shape strategy, again, going back to this back to basics thing, one of my clients who runs a very meaningful business, right around the time of COVID hit, he instructed, us as well as all of the other agencies that work with him to essentially do an audit more from an accessibility standpoint, but also a cultural sensitivity standpoint, making sure that in marketing we have the proper depictions of people, by race, color, ethnicity, weight, to not only be more accessible to as wide of audience as possible, but then also to seize the moment on some of the cultural issues that are happening here in the States and around the world. So some of those things from a basics perspective. And then, early in the COVID times, this has tapered off a bit, but early on, there was absolute focus on costs and where are those cost centers, especially as the influx of digital traffic, at least in the industries that I work in, a subset of that traffic also calls into the call center or sends emails to the support group. So helping think of, 10,000 plus call center employees for a company, how do we make them more efficient? And through experimentation, machine learning, virtual agents, if we're able to save those folks even 30 seconds out of a day or a minute, that's a huge deal at scale. So
for sure,
some of the back to basics themes, and then cost controls come to mind on that.
Very clear. Thank you. Just to drill down, just to go down maybe one step regarding sort of KPIs and metrics, maybe without getting into the details. You guys have I'm sure you look at a lot of KPIs and metrics for your business, but what are the big ones that you're looking at? From an acquisition standpoint, and maybe to give some perspective to the audience today. And maybe we'll start with you, James.
Sure. So as a company that focuses predominantly on scale and increasing scale, traffic and keyword sort of SERPs, so search engine ranking positions, are very important to us. I know some people would consider traffic a vanity metric, but for us, we're looking in millions and millions of people, and naturally, if we get an extra 5 million people, the funnel, even if it is a little bit leaky, will still be pretty healthy for us. So yes, traffic. We do monitor how the community is interacting, and we want to make sure that people on the social network are doing well. So engagement, likes, etc., have some importance. But I would really jump to the other end and then look at revenue, look at retention, look at churn rate, anything like that for the SaaS side of the business. But yeah, traffic first, then more monetary stats following.
Thanks, James. What about you, Bastien, on that front?
I mean, like any company, it's a funnel. It's a funnel. How many people arrive at the top of the funnel? We don't even monitor that. A bit like James, the traffic on the website. Hey, it's so we start with the number of people that sign up. That really provide their information and go through a process to register, and from there, the conversion rate into investors. And And that takes time. So we look at the conversion after 1 month, after 2, after 3 months. But we also notice that some people that signed up a year ago come back and become investors. So, that's why for us, the top of the funnel is still important, number of signups, because we know that we will be able to convert them as we communicate, educate them, and provide them the right product in which they want to invest. Obviously, you also want to make sure that you retain them. It's not a kind of subscription model. They invest, they stay invested for 2 years, let's say, but the goal is for them to make a second investment, third investment, and grow their portfolio with us. So for that, looking at the performance of our past offerings is very important, because that's what will convince people to come back and to refer their friends. And so we communicated a few days or weeks ago that we reached 650 million of principal and interest repaid to our members. And so that's the kind of metrics that is very important to us, because it will feed the wheel of reinvestment.
Thank you so much. And Matt, on your side, I think the metrics, there's a lot of data out there, and top of the funnel is important. But anything on the KPI side that some of your customers are a bit more focusing on in the past few months?
Yeah, absolutely. I mean, it depends what type of business that I'm working with at a given time. But for example, I might have a client that is looking to, has a brand new app, so they need to increase adoption. Those folks are at a different stage than, say, a product that is out in the market for 5 years that needs to, increase feature utilization or repeat use. So it really depends a lot on the product. And then unfortunately, depending upon what silo the channel is in, one of the things that needs to happen that I talk about on a daily basis is how do we, aligning on a macro KPI or two that, the business can optimize to on the macro level, but then still maintaining your, channel and engagement and product utilization usage metrics, on that level to boost, individual feature usage. Because oftentimes I'll be working with a product manager that will have conflicting KPIs from other product managers, and the need for that one overarching KPI is then needed or helpful. So yeah, it's a little it kind of depends, unfortunately, and I think just aligning on the right metrics, especially in product and marketing, and having those teams singing the same song, that's going to be a challenge, but also a very big opportunity for us all.
Thank you so much. One question around, there's some themes, Matt, you mentioned personalization, which I think is not, it's real now. I mean, A/B Tasty, we do some of that stuff, and it's important. You can do a lot of segmentation and push the right message at the right time to the right audience. What about AI or machine learning or these type of technologies? Did you guys implement any of these or not? Can you give us just a quick overview on if you did push any of these things?
Yeah, absolutely. Both myself and my team's doing this just from a delivery perspective and making sure that we're bringing, the best tools, techniques, and capabilities to make our work more efficient. And our clients are also, leveraging machine learning and AI quite a bit more. A few areas where we've seen AI help quite a bit is on two areas. One, on campaign delivery times. At least in some of the clients that we're working with, we wrote a predictive model and we're able to determine the optimal times that a user is most likely to open and then interact with a CRM message. And we tested that head to head. We test everything, of course. And the model not only improved performance, but then is improving performance over its past performance, if that makes sense. Another area, again, going back to this notion of call center, I'm of the belief that there is just a massive amount of untapped intelligence, value, and then intent data in that call center information. We're using machine learning and AI actually when an agent is on the phone to do some transcription of that in real time for the purposes of surfacing information to the agent to make them more efficient, or if customers on the web chatting with an agent or even a virtual agent, surfacing content relevant to the customer automatically via machine learning. So anyways, we're trying to leverage it wherever we can. It's supervised, right? And then we're taking a methodical approach of experimentation, validation, and then making sure we're only using the right data elements and not the whole kitchen sink for that modeling.
That's great. I love the continuous optimization. Get better all the time. So that's great.
Absolutely.
James and Bastian, any AI ML in your marketing investments, or what you're doing on your digital properties?
I think we use marginally, like Matt mentioned, to answer questions more relevant and faster from our users. We don't use it on a day-to-day for the core operations of business, because everything is more custom. We're delivering special products. It's not the same product again and again, so it's tough to do that. But I would say also in financial services, it's a very delicate topic to use AI, machine learning. I was in consumer lending before. You have to stay away because of all the regulations from that kind of technology to underwrite loans, because very easily it would drive you into discrimination of users. So there are definitely some opportunities, once you have scale, to optimize, your marketing emails and things like this. But for us, it's marginal now.
James, any comments? Thank you, Bastian.
I would say I would echo Bastian here. It's not very core to what we do. A lot of our traders use sort of algorithmic trading, but that's completely separate. I would say the one thing, as a very tactical piece of advice, I'm not sure if we're going to recommend anything, but a company called Chat Fuel for a Facebook Messenger bot. The amount of people coming to our Facebook looking for one-to-one support, and us not offering that support because we have so many users and most of the users are free. It's like trying to get support on your Gmail account. It's just impossible, right? So AI messenger bots are actually very handy when you don't have the resources to staff a full resource team. But apart from that, no.
Okay. Very clear. Thanks, guys. So I have a last question for you guys, and we have a few questions that the audience asked, and some of them are interesting. So just wanted to ask you guys, what's your key takeaway on where businesses are going to invest, where you're going to invest? What's your number one thing that you want to share with the audience today? James, do you want to start?
Yeah, I'll jump in. I think it's definitely value. When showing value up front and giving it away for free, and then using that as a means of starting a conversation to get them to become a customer is just so useful. Whenever we release a new product, or a new addition to the product, or a new way of visualizing stuff, the amount of love we get, the amount of increase in sort of people using it is massive. And of course, we're a trading platform, but everybody has industry expertise. Everybody knows something that the customer is unsure of, and being able to offer that as basically a tool so that they can help sort themselves that to me is where you get the scale. And if you get the scale, then you can focus on optimizing everything else down the funnel, and you'll get the revenue as a result. So lead with value is what I'd say.
Matt, from your standpoint.
Yeah, I think the kind of piggybacking on the value approach, absolutely. We've seen too with a lot of our users that just keep it simple. Guide the user towards, especially if we have an intent signal, give them what they're asking for and let them move on. Users have a lot going on these days, right? So I think there's something to be said for keeping journeys, content, explanations as simple as possible, and then being there to be supportive and helpful when a user raises a hand. Another area is making sure, this is something that we do, but many of my clients don't, is everything that we do in digital, but I would argue even not in digital, should go through either a research process, user research process, a testing process, A/B, MVT, et cetera, or a combination of the two as part of just the regular way of doing things. That message has been received well from different clients. And I think that, the more that, folks hear the leaders of experimentation, whether that's Google, Facebook, et cetera, talking about the importance, and then all of us as practitioners talking about it, it'll continue to increase in adoption across clients.
Thanks, Matt. Bastien, from your point of view.
Yeah, and I'll bounce on some points that Matt just made in previous questions. I think that we try to make our platform and products easier to understand for new users, because our user base is very diverse in terms of investing experience. We have people that have spent 30 years working on Wall Street, that trade, or kind of deal with the kind of product that we offer in their work. And then you have some people that have never been in finance, work in the industry, work as a doctor, and want to get access to the alternative investment product. And so you need to educate them. So the segmentation and personalization of the experience is really something that, it's part of being digital. It's part of reaching scale and reaching new segments of users. But it's really very important to be able to convert these users.
Great insights, James, Bastien, Matt. I think, one of the things, if you look at, delivering value and, delivering the right message at the right time, I think, again, personalization is a big thing out there, and providing the right content for the right people in their journey is very important. So thank you again for that. So we have a few questions. Do not hesitate to go on the Q&A tab if you have any questions, and we have 4 questions, so I'll go through them right now. There was one specific for you, James. I think you have a very interesting business model because you drive a lot of traffic. Obviously, you got a freemium offer, if you will, and you obviously want to convert these people. So question from, I don't know the name, it's anonymous attendee, but how are you focusing on converting these users and making sure they don't end up dabbling in the free content and falling out of the funnel? How do you, any strategies around this?
So I think there's 2 elements. One is tactics and one is strategy. From a tactics perspective, all the things that you would expect. So making our messaging clearer, providing the value up front. So a large, where most of our users convert is on our charting platform, and they come across a gate. Like, you can't do that because you can't have 5 alerts because you need an upgraded package. Now, before we just said that. We just said, you can't have them, upgrade. When COVID hit, what we were trying to do, we went through all the messaging and said, well, why would you need 5 alerts? Why would you need CAGI charts or Renko graphs, like all this stuff. Like, what value does it provide that you're not currently getting? And clearly articulated that in the simplest language that we could. And we did that across all of our gates, and we saw a massive increase in the amount of conversions that were coming off of it. That's a tactic, and then as a strategy, our approach, as I've illustrated in previous questions, is very open. The natural sort of gut response is to put up more gates, show more places where they can sign up straight away. Whereas what we try to focus on is, first of all, empowering our power users. We spend as much time on the charting software as we do with allowing people more ways of self-expression, putting images on, images on the charts, showing their ideas, like different ways that they can express themselves, like you would expect in any social network, and then working to develop a referral scheme, word of mouth marketing using Tradingview coins, let's say, where people can award coins just like you would have on Twitch or Patreon or something, or Reddit, and thereby empowering our super users to go and convert their friends and their people. We'd much rather have 100 people love us than 10,000 people just be merely indifferent to us. So I'd say on a wider strategic level, focusing on your biggest fans and giving them the tools to go out and convert others has been our wider means that we've been trying to develop over the long run.
And I'm sure referrals, thanks, James. I'm sure referrals also, Bastien, on your side is maybe a channel for you guys as well.
Yeah, I mean, referrals, it takes time to reach that stage as a business, because people, sure, as I mentioned, with trust, people, it's not, hey, you should test that website. It's, hey, you should invest 5, 10, 50K. With that website. So there's definitely a need to reach a certain level of trust and confidence to get there. And really then it's understanding where people are coming from, because you're going to have a lot of traffic on your website that is not qualified. People clicking on an ad, people clicking on Google. And so really figuring out who is really interested and who ended up there, but is going to drop, and that's kind of cleaning up that noise is a big effort to be able to deliver the right experience.
Thank you both for these positions. This is great. There's one question around KPIs. I'm coming back to KPIs. One question is, what are the top KPIs to look at in the new normal? I think you guys elaborated on this. But are there any customer KPIs that are using like NPS or CSAT? What kind of KPIs are influencing your product growth? Can you give me are you using NPS scores, for example? Any feedback on that stuff? Matt, James, Sebastian.
We use CSAT and NPS when we're forced to. So yes, people force us to use that, but we try not to. I'll be perfectly honest. I'm not the expert as to why or why not. In working with product teams and just going to the product roadmap angle of things, a lot of the product managers, and these folks are building products that already have 1 billion users on them. They're looking at the market. They're looking at countries and regions in the world where penetration is low, where engagement is low, and then actively working with not only research teams, but then other parts of the organization to develop new product features targeted at specific groups. So really product personalization and broad personalization in that regard.
So on my side, I feel like NPS is that, everybody does it, but it's mainly for PR. You could say that you would do it to track, how your user base is doing. But at the end, it's mainly a PR metric. You can't really do too much with it. And you can influence it based on when you engage the user to answer these kind of questions.
Yeah.
So in itself, I don't see it really as a tool for growth and product and feedback, but really about kind of PR, communicating to you when you try to raise money.
I would agree with you guys, James.
Yeah, I hate it. I think it's a useless trick. I can see in some situations why it'd be so useful. I think, to be honest, we're really skeptical. The same with review sites, right? And trying to get third-party reviews. Like, people use it to have an axe to grind to try and give you to try and leverage. And I just don't think personally it's that useful, even for informing on product. There's a really, I don't know if I'm misquoting, but apparently when Ford in the early days was asked like what his customers wanted, he said if he'd listened to his customers, they would have he would have given them a faster horse instead of the automobile. And it's a bit flippant, but I think people can go down a sort of a rabbit hole trying to chase this mythical idea of what the customer wants, rather than just focusing on a little bit common sense. They want a better experience, they want it cheaper, they want it smoother, they want it shinier. Like, all of these things intuitively. So trying to like gauge whether it's orange or blue, I don't think it matters personally.
Yeah, and I think that, we see people kind of tweeting to their airlines a complaint because they know that's the way to get a refund. So all these channels are you need to be very careful how you kind of analyze the data.
100%. I mean, look at say Apple on top review sites where customer responses, they'll have the worst rating of anybody because they don't care. Right. And it doesn't affect their brand in the slightest. They're a great company. They don't need to. They just don't need to respond to people trying to leverage for free like refunds or the full gold package because they're upset. So yeah, I think we need to we need to be a little bit as marketers a little bit less prone to swaying in the wind of sort of customer demands.
This is great. Thank you guys so much. I think there are, from a summary from my standpoint, 2 words that I think are, 3 words I would say that summarize maybe the discussion that we had today. One is, build value, build the value with the content, what you offer to the people that are coming to your digital properties. Second word is trust. I think Bastien and James, you guys are 100% in that, mindset because, obviously you're in the financial arena, and I think trust is a big word. And I think the third one is personalization. I think these are the delivering the right obviously offers, content, whatever it is, to the right people is also a big trend. So I wanted to thank you so much. There was a question around how can we connect with the panel members after the conference? Obviously, I think you can go for LinkedIn to connect with Bastien, James, Matt, or myself. But thank you again to MoEngage for the FinTech and Digital Banking Summit. And thanks, Matt, James, and Bastien again for your participation. I think it was a great discussion, and I wish you a great end of day. Thanks, guys. Appreciate it.
Thank you.
Thanks very much.
Thanks,
Cheers.
everybody.
Bye-bye.